Is the unaffordable Florida housing market about to get worse or is it about to improve? That's what we're going to cover today. If you're new to the channel, welcome aboard. If you're a returning viewer, I appreciate your participation in our journey. I am committed to sharing the truth about what's happening in each Florida housing market. So if you find this content valuable, please subscribe, share it with a friend, and let's get into the data right now. Now, if you've been watching for a while, you know that I've been talking about the different intensities that exist within the big market, within the 5,000 foot overview of the markets that exist. So it is critical to understand what the housing market dynamics are in the hyperlocal market that you're shopping in. But for today, we're going to cover the Port St. Lucie housing market because January numbers are out and people want to know the truth. So let's get into it right now. And to be totally clear, we're talking about the Port St. Lucie Metro, which is comprised of two counties, Martin County and St. Lucie County. It's a little bit west of where my market is located. And let's see what the housing market numbers are so that you can make the best decisions for yourself, for your family, and for your financial bottom line. And what I suspect you're going to notice is that many of these metrics, many of these patterns, much of the data that we see looks very similar throughout the state. So closed sales, January of 2023, down 25.5% to 470 closed sales. Cash sales down almost 18%. Median sales price, which to be clear is not the most instructive number. It's the middle value in a range. We want to see what the average price is. And what you will be shocked to learn is that the average sales price in the Port St. Lucie region got smacked down in January 2023, down almost 13% from 525 in January 2022 to 458. Now, to be clear, depending on which hyperlocal market that you're shopping in this St. Lucie metro, you may find very different price points, very different intensity of demand. But overall, the trend is not your friend if you're thinking about selling. And if you're thinking about buying, well, this is great news because there has been a 13% average sales price drop as of January. Now, to be clear, we're in March. So I suspect that when these numbers come out, you're going to see a heck of a lot more supply. And I would not be shocked, especially with interest rates the way they are right now, if that average sales price continues to tick downward. Yet to be determined, I don't know, but the trend does not seem to be our friend. Let's continue down the list. Median percent of original list price received, down almost 6% to 94%. Time to contract up 238%, 44 days. 44 days is not a heck of a lot of time to go under contract, but it's a lot more time than it was back in January 22 when it was 13 days. Time to sale up 38.7%, 86 days. Again, these are returns to normal. And this particular metro is a very good example of how markets trade differently. Because the truth is, prior to the pandemic, this was a region that was not appreciating by double-digit growth. This was not an area that I would consider hot. But this area, this region has been completely in fuego, on fire, since the pandemic. It was more affordable and there were tons of buyers that were flocking to it. And while we don't have a pattern or a trend confirmed yet, I'm not exactly surprised to see that the average sales price got smacked down by 13%. And to be totally transparent with you, I am not shocked by these numbers. I am not shocked that we've seen this downtick. This is not an area that most people were interested in living in previous to the pandemic. And I would not describe this as an area that I think is more insulated relative to other parts of Florida. But it is what it is, and we'll see what happens in the future. But I remain committed to telling you the truth, irrespective of market conditions. So whether the market goes up or down or to hell in a handbasket, I will be the one shouting it from the mountaintops so that you know exactly what's going on and you can advocate for yourself the right way if this is an area that you're looking to score a deal in. But As of January, it looks to me like there were deals to be had and negotiations to be made. But nobody cares what I think. They want to see the data. They want to know what the numbers are because the numbers don't lie. New pending sales down 13%, and new listings were up 8%. Well, that does not surprise me, especially with the sales price dropping. I suspect there are lots of homeowners in this market that are starting to get a little bit shook. They're looking to tap out the equity that exists, and they're looking to get in front of the competition that will exist as the pain of recession gets worse, as people start thinking about selling. They want to tap into this equity while there's still equity there. But it is what it is. And new listings are up 8%. Great if you're thinking about buying, probably not so great if you're thinking about selling. Pending inventory, which is the inventory on the market that is under contract. Active listings, your competition if you're thinking about selling, and your choices if you're thinking about buying. Massive uptick, up 200%. January of 2022, there were 747 active listings. That number exploded to 2,245 active listings of homes for sale. And to be clear, we're talking about single family homes in Port St. Lucie. Month supply, massive uptick, up 255%, 3.2 months. And that's a huge jump from under a month. To be clear, 3.2 months is still a seller's market, but it's trending to neutral. And I suspect it's going to skyrocket to a buyer's market as we get into the year. But it is what it is. But now let's look at what everybody wants to know. Is there a foreclosure crisis? Is there a big uptick in distressed sales? And on paper, yes, it looks like there was a big uptick in foreclosure sales, up 33%. And a 33% increase in anything is a big number. I certainly wish that my stock portfolio was up 33%, but unfortunately, that's not the case. But let's look a little bit closer to see what that 33% actually means. And as you can see, there were four foreclosures. Four. Not a big number, right? There were three in January 2022, and there's only four now. So the pain of recession has not been sufficient to cause distressed sales yet. But that doesn't mean it won't happen in the future. And I suspect that we'll see this number uptick as we go into 2023. As far as short sales are concerned, zero, zilch, nada. Double goose egg in 2022 and 2023. Now, I hope you found this content valuable. And if you did, please subscribe to the channel, give it a thumbs up, share it with a friend. If we can ever be of assistance, please reach out and check out my next video because I suspect you will love it a lot. And until next time,